were talking about the defensive positioning that you're looking at the moment, given the volatility, uncertainty that faces Asian equities. I know you do have some interesting overweights, including India. What does your strategy look like at the moment?
We are mostly concentrated, as far as our overweights are concerned, in India and Southeast Asia, like Indonesia and Thailand. These are also the best performing markets this year. North Asia has been, troubled by, of course, the recessionary concerns in the developed markets because they're mostly export-orientated, and the domestic issues in China in terms of the regulatory pressures and the COVID-0 strategy. We think that the recessionary concerns and the monetary policy-related uncertainty is likely to continue for longer, maybe till the end of this year. We're hopeful that, the issues in China, the domestic issues, would possibly be sorted out post the mid-October meetings. But for now, we're still remaining focused on the India and Southeast Asia markets. These are not only growing in terms of economic revival post-COVID, but also strongly growing in terms of the earnings estimates of the corporates that are there. So I think that's the way to play Asia for now, at least.
Manishi, one of the big factors is going to be how much further strength we see in the dollar because of that impact on risk sentiment and risk assets, right, particularly here in Asia. Take a look at this chart, which just shows, of course, we see the dollar index sitting at a record high, the Bloomberg dollar index, I should say, sitting at a record high, the overall dollar index at a 20-year high. Has that impacted the way that you're looking at positioning?
The dollar's strength necessarily leads to funds moving away from emerging markets, and particularly the Asian emerging markets. Now, having said this, I think the Asian currencies, at least the emerging Asia currencies, haven't done so badly against the dollar. They have depreciated anywhere between, let's say, 3 to 7% this year. We think that in the near term, the dollar dominance or the appreciation of the dollar is likely to continue. Not only is the Fed aggressive in terms of rate hikes, but they're also getting more aggressive in terms of QT, and that's going to accelerate from September, which in the near term could lead to further appreciation of the dollar. So, I think the best way for now would be to focus on the strong cash flows, avoid companies which have US dollar debt, and focus also on companies which have US dollar revenues, which could be a paradoxical gainer in the present environment. There are many such exporters in the Asian region, and we do have significant weight on, on those companies which are predominantly from the tech universe.
Now, you downgraded from what? From a buy to neutral on China back in May. So you were ahead of the curve. I assume you were looking at the property crisis to a large degree, and I guess the COVID-0 hangs over everything lately in China. So based on that, where are you now? Where do you see China becoming investable again?
I wouldn't use the word uninvestable. So there are pockets within China which are investable even now, and our asset allocation within China focus on those areas. For example, we are looking at the policy beneficiaries like the EV and EV supply chain, some of the select consumer discretionaries and staples which have strong pricing power and strong dominant market position, and some of the financials which have very high dividend yield. In fact, dividend yield is a running theme, that we are focusing on in our entire asset allocation. That said, Chinese equity performance has been hampered by both the regulatory pressures on various sectors and the COVID-0 policy, which has decimated domestic consumption. So those are those two are the sort of milestones that we are looking at. We are looking at easing of the regulatory pressures, which I think are beginning to happen. If I look at the U.S.-China negotiations for delisting of the companies, that's one example. And the COVID-0 restrictions, I think we have to wait for that to go away, at least till late October to mid-November after the Party Congress. So those are the important milestones that we're looking at for, getting more constructive on China.